What's going on, guys? How are you doing? I hope you have been having a beautiful week and a profitable week for that matter. So how are you, traders? Welcome back to the channel. This is Shocks, and this is ShocksCapital FX YouTube channel. Right. Today, guys, we are going to talk about a very fascinating topic, and this is about rules. So we're going to talk about a rule-based system, or a rule-based way of looking at your charts. So here I'm just going to give you 3 rules which you should keep in mind when you look or when you glance at your technical chart, at your forex technical chart. So this, guys, we're going to do it on a single time frame. So we're going to do it on any of the time frames, but I'm going to show you on the M5, then I will show you on the H1. But as you know, price is fractal. So price being fractal, it means whatever you can do on the M1, you can do it on the H4, you can do it on the monthly, you can do it on the H1. So this is what we are doing. I'm going to list for you 3 rules at the end of this video, but as we go, I'll be introducing one rule at a time as we go further. So guys, if you are new here, don't forget to subscribe, hit that notification button so that you don't miss any of our content when we do upload these types of videos. So on this channel rather, we talk about BTMM, we talk about ICT, we talk about order blocks, we talk about order flow, we talk about work of distributions, everything concerning smart money concepts we talk about on this channel. So if that is something you're looking forward to learn or explore, this is the channel. Hit that subscribe button, turn on your post notifications so that you don't miss any quality content from this channel and this man. So rule number 1, we're going right into it. Rule number 1, you have to have a mechanism for trend confirmation. So your rule number 1 is trend confirmation. So we're on the M5 time frame here. This can be used on any time frame, any forex pair, any instrument, any synthetic indices. So if you don't have a synthetic index account, or if you don't know what this is, I have the links in the description down below, so you can just go browse and have an account for this broker so that you can trade these beautiful indices which are very easy to trade. So guys, trend confirmation, there are many ways of confirming your trend or identifying your trend for that matter, but for this particular video I'm going to show you a mechanism using what we call channel break. So that's trend confirmation we are going to use. So the advantages of using a channel break or a trend line to confirm, a trend line break to confirm your trend is this. You are going to catch the very peak of a trend. You are going to get the peaks. You are going to enter into a trade very early, which is a very good thing. So guys, trend confirmation, we're going to use what? We're going to use a channel break. So as you can see, this is a channel. So what is a channel? A channel is a way price is how price moves as when it's trending or when it's consolidating but trending, you know, consolidating with a direction, not just consolidating sideways. So this is how it looks like. So if when price is moving from this part, from this peak, it's going up, then it's going down, then we have a correction, down, correction. If you are a regular to this channel, you would know that this is an impulse correction move. So as you can see, we have this trend line which is more like a brico. Price is not going through that brico, so that's your break which you'll be waiting for. So this is how price is moving. So the moment price breaks this upper trend line, you confirm your uptrend. This is down, so you are waiting for a trend change. That's why I was saying you are catching the peaks, you are catching the tops of a trend. So when the trend change, you are there, you are waiting for the trend to change, and when it does, you are there. When it comes back, you are catching the broker, you're punishing the dealer. So this is how we are looking at it. So I will show you how this is done. So this is a channel break, price breaks to the upside. That's your rule number 1. That's rule number 1, using channel break. So as you can see, we have this also, we have this channel break too. After that, we have this channel break to the downside. So I'm just going to show you these 3 examples for now, then we'll go deeper as we introduce all the rules. So rule number 2, yes, you guessed it, you are confirming the trend. What do we use to confirm a trend? A weight. Yes, yes, that's correct. Break of market structure. So break of market structure is what we are going to use to confirm a trend change. So number 1, we are seeing the trend changing, we are seeing price breaking a structure. So what are you waiting for? So the structure that is being broken is the what? Is the break. What you are waiting for is price to break a what? Is price to break structure. So this is here, you see this high being taken out, this high. So price takes out this high. When price takes out this high, this is what we call a break of structure. So I have a video which explains the best break of structures in the market, I will link it in the is it top left corner of your screen. I'll put the card there so that you can watch it if you don't understand or if you haven't watched the video. So guys, this is it. So break of structure, let's go here, let's just zoom a bit so that you can see what I'm talking about. Then we have this is the break of structure, right? So this break of this high, right? So number 1, we are saying we have a break of a what? A break of the trend line, a break of a channel like this. Then after that, we are looking back to see if we had a break of market structure. After we identify a break of a brick, we go back and identify a break of structure, which is our rule number 2. We identify the trend, then we confirm the trend. Do you understand? Identify, then confirm. So you identify by using a channel break, then you confirm by using a what? Break of market structure. Right guys. So rule number 3, yes, rule number 3, we're moving. Okay, so rule number 3, what are you waiting for? You are waiting for a retest of an order block. Yes, I can't teach you guys anything without mentioning an order block. They are that important, so this is an order block, right? So after break of market structure, we identify there's a break here, there's also a break here. So after this break, right guys, I want you to see it, and I want to tell you, after this break, this was the order block that took out the break of market, that took out the high and the break, right? So that order block is the order block we are looking for, or is the order block we should have used, or we could have used and would have been taken out. Yes, you heard that right. Our stop loss would have been hit here, right here with this candle. Our stop loss would have been hit. But look at price. Look at what this thing did. The dealer went back and break another structure. So when he took out this high now, you'll be like, yeah, I got you. I get you. I see what you are doing. Then after this, you see this move. This move was too beautiful. So you would have marked this order block. Why am I saying this move is too beautiful? If you are new here, guys, just go and watch our videos on order block so that you understand why I'm saying that move is beautiful with regards to this one, to this candle, to this order block right here. So as you can see, price came back, retested the order block, and went up and hit our take profit. Why am I saying take profit here? Guys, this is our safest take profit. Maybe I will do a video on take profit and stop loss levels. So guys, if you guys want such kind of a video, you can just say yes, do it in the comment box. Just pause the video, tell me if I should do it or not. Stop loss and take profit levels. If I get 10 comments telling me to do it, it will drop next. Okay guys, so we have a deal. Right, so that's rule number 3. So let's go to a higher time frame. So guys, I'm about to tell you a secret. The higher the time frame, the better. Yeah, you heard it first. V751S. Right, so we are looking at this. This is a channel, as you can see. This is a channel. Number 1, we have a channel break to the downside. Let me zoom so that you guys can see. We have a channel break. After this break, that's your trend. The trend is changed after it takes out a channel. What happens after that? You see a break of structure. This is a break of structure, right? So what are you waiting for? A retest of an order block. So we have this order block right here, right? Then we also have this order block which I marked here. Why? Because it took out this one, this structure here, took out this structure, and that was beautiful. Took out this structure and so forth and so forth. So this is an order block, and look at what price did. It came back beautifully to the what, to the order block, and this is how price should come back to retest an order block. This is how price should retrace. It shouldn't retrace aggressively. It should come steadily. You see, gently. You see, so this is our price. Then number two, you see, this is a channel. Took out the channel here. Then this was the order block, right? Price did not go back right back to the what, to the order block, but here we have this other order block. And if you have watched our video on order block manipulation, you would know that this is manipulation. While when price throws pins beyond the what, beyond the order block, and still goes your direction, this is order block manipulation 101. So when you see those pins beyond the order block and it closes inside the order block like that, you know you punish the dealer. So that's so let me just give you a summary of these rules. Number one, trend identification using channel break. Number two, break of market structure, right? So you have to know break of market structure. You need the best of breaks, right? So you need to identify the high probability BMS for this. Then number three, you are going for RTO. So RTO is the retest of an order block. That's number three. So the bonus rule is after price retraces back to your order block, just go in a smaller time frame for a boss entry. Guys, it's been wonderful. I hope you benefited something from this video. If you did, just leave me a like. Just give me a like, comment down below, and most importantly, trade what you see.